Chapter 5, Problem 1 is probably the most chock full of accounting babble problem you'll ever have to deal with. So let's go through and start wading through it. So put on your boots, we're going to start wading through all this BS. So here's the story. We're looking at a company called Joey's Bike Shop. They sell new and used bicycle parts. Majority of its sales are cash. It makes a significant amount of credit sales. So we know that total sales is going to be greater than credit sales. During 2013, its first year of operations, Joey's Bike Shop experienced the following. Now let's go through and see what we need. Sales on account. We need that. Cash sales. We don't need that. We're looking at uncollectible accounts. If we already have their cash, what are we going to do? Give it back to them? We need to know the collections, because the difference between this and this is how much we have in accounts receivable at the end of the year. And we need this number because that's the number of people, the number of dollars during the year that we got cheated out of. So we had to dig our way through that piece. The next thing we had to wade through was this piece right here. Joey estimates that 1% of its sales on account will not be collected. So we have all the facts we need. So what is the accounts receivable balance as of December 31st? Well, let's do the numbers. We have it. We're going to need the amount that we had on the account, the amount that we collected, and the amount that we wrote off. Wrote off and charged off mean the same thing. It means we sold these things and then we found out the customer went bankrupt, the customer died, the customer left the country. We know for a fact we're not going to collect that money. So we've written it off. So, and again, this is easy if you do it step by step once you wade through the accounting babble. The hard part of this is the accounting babble. So, this is not a T account. This is not, those accounts are not related. I just have them that way so I could get them on a single sheet of paper. These are two separate accounts. I will show you at the end the only way that they are linked. So, sales on account for the year, $260,000. So we need that. Sales on account. Now, of that 260, we collected 235. Okay? So let's collect that 235. And that leaves us 25,000. Unless I did something screwy. So we got that piece. Then they also said, and we wrote off $12.50. So when we write off $12.50, here's what we do. We write off $12.50. And that's our write-off, WO. And the balance in our accounts receivable is 260 minus 235 minus 1250, 23,750. Okay, now So we did all of those pieces. Then it says they estimate that their sales 1% will not be collected. So that's 1% of sales on account, not 1% of total sales. So that's 2,600. That's our estimate for uncollectibles, uncollectible accounts. During the year, we used some of that. We used up that $1,250. That was our write-off. So our balance at the end is 26 minus 1250, 1350. That's our balance. Okay, so question A says, what is the accounts receivable balance at the end of 2018? Well, there it is, 23,750. I'm not going to write it again. It's already there. B says, what is the ending balance of doubtful accounts? And I got to draw your attention to some of these. After all entries and adjusting entries are posted. So that's after we put in the estimate, after we put in the charge off. That's the balance in the uncollectible accounts or doubtful accounts. So again, we just have to bring that number down. 1350. C says, what is the amount of uncollectible accounts expense? This is a definition. Uncollectible account expense is the amount we estimate we will not collect. Not the amount we didn't collect, it's the amount we estimate. So we estimated at the time 2,600. And then last but not least, it says, what is the net realizable value of accounts receivable? Now, if you know what net realizable value is without looking it up, you were some kind of accounting savant. The definition of net realizable value is the balance in accounts receivable, 23,750, minus the balance in the uncollectible accounts. So 23,750 minus 1350. So the balance in the net realizable value of accounts receivable is 22,400. Now, for users of financial statements, managers like yourselves, that tells you that based on what we know, we have this much money owed to us. This is how much we expect that we're not going to collect. So the amount of the money owed to us that we expect to collect, that we hope to collect, is 22,400, and that's accounts receivable, and you'll see that often abbreviated as NRV. Not tough math, tough because of all of the accounting babble, and you just have to wade through it. If I were you, I'd make myself a little cheat sheet. When they say this, they mean this. When they say this, they mean this. It's the best way to go.